Assalamu alaikum and good morning. Um, Thank you for attending this webinar. Today was supposed to be indicators as part of the agenda of which part technical analysis we're going to be covering, but I decided that indicators are really not as important as risk management is and psychology is. So we'll save indicators for the end because even without indicators, you can trade. But the most important thing, 100%, is managing your money. And I think risk management is the number one thing in position trading, investing, because you're a money manager. That's what you are, and that's what we're here to do is to protect our capital. Without that, you won't be in the market very long, especially if you're swing trading, shorter term trading. Um, the risk is a little bit greater than position trading. Before we get started, I know last week we had gone over support and resistances for those of you who were here. So I just want to touch up on it a little bit because one thing I forgot to do is show you guys how, if you were to see a bear chart, not a bearish chart, but just like a naked chart or a chart without any lines or support or resistance on it, how would you go about doing it? So we'll take five to 10 minutes just to go over that. And today, instead of TradingView, I'm going to go into Thinkorswim. Thinkorswim is a free app, free. It's by Charles Schwab, and you can use it. So before I go in, I'm just going to clear this chart of any moving averages. Let's move the 200 out the way. So if you ever come on a chart and you want to decide, well, I want to take a trade on this company and I need to start filling in where should I get in? The most important thing with support and resistance is where do you get in? Where do you get out? What we that's what we focus on, right? We're here to make money, not friends, right? We're not in the market to make friends. So 1 second. Let's go back 10 years on Tesla. All right, there's a chart for Tesla. I'll just use Tesla as an example, and then we can go to other examples as well, just to finish it off. Here's S&P 500 over the last 10 years. But yeah, and here's NVIDIA. All right, so if you come on a chart first, and you want to drill down to the daily chart or the 4-hour chart, first of all, you want to start on the higher time frames, which is the monthly chart. That means every candle here is a month. So this is Tesla dating back all the way to
Sorry, brother, are you
2016.
sharing?
Yeah, it's the screen is sharing.
I don't know
Okay.
if just me, but I cannot see your screen.
Um, I don't know. It shows that I'm sharing. Can everybody else see my screen? Is anybody having trouble seeing my screen?
I just see you.
Oh, you just see me. Okay, I
Yeah.
Yeah.
apologize. Let me see.
Yeah,
Application
I
window.
can see the screen.
You can see the screen, right? Okay.
Yeah.
Yeah, I mean, I can see myself seeing the screen. Um, you may have to just adjust adjust your settings or something because yeah, same thing. You can see my charts right now or no? Can everybody see my charts? My brother Nawaz can't see it. Everyone else can see it.
Yes.
Okay. All right. All right. And maybe some setting if you're on Android or if you're on a phone. Um, I'm not sure. I mean, maybe if you look at viewer screen or viewer um, speaker speaker screen, potentially you can look at it. Nevertheless, I will be recording this and putting it on YouTube, inshallah. So if you do miss it, I apologize. Sometimes if you log out and log back in, it may help. So I apologize for that. Inshallah, I'll go ahead and continue. Um, all right. So the monthly chart is where you want to start off, especially if you're doing position trading, swing trading, doesn't matter. You need to know what the higher time frames are, what the higher time frames are showing you, because if the higher time frames are showing a bullish sentiment, which is that the market's going to go up, then most likely the lower time frames will follow in order. Um, so here is Tesla on the monthly chart. And as you can see right away, and you have to understand that from my last webinar when I showed you that support and resistance are not a single line. It's not like a single line like 399.50. it's a zone because price, yes, sometimes it does come and pinpoint to the exact penny, exact dollar, but most of the time it comes in a certain zone. And if you're waiting to hit a certain line, like a certain price point, you're gonna be waiting for quite some time. Um, so support and resistance come in zones. So right here, we see that there's an obvious zone up here that Tesla has gone all the way up to 488.54 in December, rejected up there, did not hit 500, which is a psychological level, and then retraced back. But where did it retrace back to? Same place as back in November 2022, right? Same area. That's the beauty of technical analysis. It's the price is always going to come back to a point in history where price was strong, where there's strong sellers or strong buyers. So once we put all our support and resistance areas here, you'll see how easy it is to just get into a trade. It's not easy to trade, but it is easier to get into a trade. So right here, we're going to select our little box tool right here to draw out a zone. So you can see that as I place my line, price not only ended here in December, but also in January. And we're almost to the dollar, 406. If I zoom in, I mean, I know I say sometimes it's not to the dollar, but literally December closed at 404.22. January closed at 405.37. I mean, that's a whole month. How did price close within $1.25 after a whole month of fluctuation? That's technical analysis for you. That's just the way it is. All right, so we're going to draw out a box. Usually we draw from left to right because we have history and then we have the future. And to determine the future, we need to know our history. So once we draw it out, then we can adjust the box. So right around here, because we see that price opened here and closed down here, opened here, closed down here. There's a doji candle opened here, and closed down here, but in this zone right here. So we can draw a candle like this and draw a box like this and zoom out. And then on the monthly chart, you're going to cover a wider area because especially if you're going to long-term investments, holding it for a year or 2 years or even 6 months, a month, 2 months, you want to know where these zones are. So once you place a zone like this, you want to make sure that the zone has multiple touches. This is your resistance zone, right? Because price has moved up and it touched up the resistance. As you can see, this candle hits it right here. The next candle is still in the zone. Next candle also touched the zone. We got 1, 2, 3, 4, 5, 6 months touching it. So that's definitely a pretty strong zone. And up here, we almost touch it. This one shoots up right here in December, comes back here and closes in the zone. January is in the zone. Now, February is the one that's breaking below the zone. But here's where most people sell. That's what it seems like, right? Back in 2022, when price hit 410, people sold. And then it dropped all the way back down. So we have this one zone right here. And now if you look a little bit further down, we see that price is also rejecting here. There's another zone. This may be your stronger zone, but we also have not as strong zones, but we still have support and resistance, right? Now, if this is resistance, where's support? Where's support for this move up and this move up, right? That's what we want to know. We want to know how far Tesla will go down. So we're going to go ahead and mark some zones down here. Now, if you look down here, you'll see price has bounced a few times right here. Come here, bounced a few times, rejected in this area, bounce, 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 rejected, right here, and bounce. So this area right here, right around 200, seems like a pretty strong zone. Now, that's not indicative that Tesla will come down to 200, but on a higher time frame, this seems like a very strong area where price will either bounce or reject. So we can draw out a zone. And then the zones don't have to be accurate. You just have to cover the touch points, right? Sorry, I'm going to let some people in. I apologize. I'm not even paying attention here. Sorry, guys. All right. So we just drew out a support zone on top for those who missed it, and now we're drawing out a resistance zone on top. Now we're drawing out a support at the bottom. And the reason why we did this support zone on top, resistance zone, is because we have multiple touches for multiple months in this area. So now we want to know that if price got rejected here, where is it going to go down to? So it looks like it's going to go down to this area right here. You can even move this up just slightly like this, because that kind of shows that price, sometimes you just have to adjust it a little bit. to cover these areas because you have price bouncing in this area, closing in this area, and then moving back up. When it came back down, it did a bounce again. It bounced exactly in this area, same place, 2021, right, where the bounces happen. It had a break of structure, bounce, and moved up to all-time highs back here in 2021, 2022. And then after 2022, we had a rejection, came back, and it came into this zone again, the same zone that 2021 was in, right? Once that came in, it bounced, but the sellers were too strong and it broke this support zone and it went underneath. Went underneath, came back up, retested, stayed underneath, and then we had buyers take control again. Buyers took control, went above the zone, came back, bounced here, tried to stay up, went below again, and now went up again, right? So this zone is pretty strong, right? So you can assume that price will come to here. Now you say, well, what about these prices down here? Yeah, price can move lower. So what we do is we draw up more zones to ensure that, hey, I'm going to add as they go lower. So we see that there's a retest of this area, so we can draw out a zone here. Now, not some zones you're not going to have many touches, right? Some zones are going to hit and some zones are not. So you got to make sure that when you get into a zone, you have quite a few touches. Like this is a very strong zone up here, right? Resistance zone. This is a pretty good support zone as well. We have multiple candles, months closing and touching this area and bouncing off. Now below that, we have Tesla at 125, 100, where Brother Muzammil said that he'll only buy Tesla below 200 or 125. So hopefully it doesn't come that low. But now we see that this is a pretty strong area as well. It bounced off, came back up, went into this zone, and moved back up. And in between that, you'll have some other more mediocre zones where the price may respect it, but it's good to have those zones, right? So right here, we have an area where price either came here, bounced up, right? We did have a bounce right here. There's a big candle that bounced up and then it went below the zone, rejected in this zone. So first, the zone was support, right? It was support in this area. Then once the zone is broken, that zone becomes resistance. So the support becomes resistance, right? So now this became a resistance and this zone became support. Now, when you break through this zone, this support zone, now that becomes resistance and this becomes support. So there's always something below, all right? And then now if you look at the bigger picture of Tesla, you kind of know, hey, where should I get in? And it may not come all the way back here, but throughout history, it has repeated that these zones are pretty good, right? So now what we're going to do is, I mean, there is a zone right here. There's a kind of a little area where it bounced. So what you can do is instead of drawing a zone, you can just draw kind of like a line. Sometimes I like to draw lines just it's not a strong area, but it is definitely an area to consider, definitely an area to watch if you want to add to your position. So there's a little line right here that you can draw. And as we go into lower time frames, you'll see that we can add more. So now we're going to go into the weekly time frame now that we've done with the monthly time frame to figure out what the higher time frame thesis is. We're going to go into a lower time frame. Now when we go to the lower time frames, see our resistance and support zones are still there, but now you can see a slightly more detailed view of what's actually happening in these zones. Multiple touches in this zone up here, right? Rejection, and now we're leaving this zone. Tesla is actually leaving this resistance zone and headed lower, right? I mean, we can find minor support and resistances in this area. You can see that these candles are just kind of hanging out at this 338 number. So there you can draw lines, right? I'm going to select the tool right here, and we can draw a line straight across just to see how many touches are happening here, right there. So you see here that the candles are, the price action's bouncing off it, then it goes below it, then it bounces right here, rejects right here. So this has been a point of contention right here, right? And then you have price that kind of stalls right here. And now most likely price will move down to 340s for Tesla. So if you are looking for a position, where do I buy? Where do I get in? Sometimes moving averages do help, but there's nothing better than straight up support and resistances because it really shows you exactly where price is going to go and where price is going to bounce, where you should add, where you should take your profits, especially here. If you're coming from, back in 2020, 2021, and you see this area kind of holding right here, let's zoom in. And you see that the area is just bouncing up and down, up and down. So you can zoom in a little bit more and then draw out smaller support and resistance just for that area as well. That you saw that price was just consolidating. It didn't go lower. It was making higher lows, right? Higher low, higher low, higher low. And then we had this breakout candle right here, right? Came back. We had good volume on this candle right here. And this next candle was a breakout. So your entry could be here, right? And obviously, we're going to go through risk management in a few minutes, but then your stop loss will be somewhere around here. That if it goes below this, I'm going to get out because that's a failure, right? And then you have a great move up. You bought in the zone or a little bit above the zone, and you have a nice move up from 171 all the way up to around 295. Good profits to me. And you can take profits here. Or if you're looking for a long-term position, you see the pullback happening. You see that there's a area of confluence right here, that price is holding this area. So price came here, bounced, bounced, bounced. So anywhere in this zone, you could have added to your position to make a nicer move up, breaking that 300 support resistance, which was right here, and then went all the way up to 420. So when people get into swings, traders who are consistent, profitable traders, they don't do anything without doing an analysis of the stock before getting into it. So this is the way you would do it. You would look at support and resistances, you would draw them out, and then you put them in zones. So now it's a much easier chart. It's not very confusing where you see lines going up and down. Now, if we enable, let's say, a moving average like the 200-day moving average, which is a moving average that most people look at to determine if a stock is bullish or bearish, because if it's above the 200 moving average, then they still consider it bullish. But that most people do that in the daily chart. So let's drill down to the daily chart. And let's say you're ready to take an entry. You wouldn't do it on the weekly chart. You would do it on the daily chart. Now that you see that the thesis for Tesla is, well, we're losing this resistance area and we're going lower. So you have to decide, do you want to take a risk and get in right here, which is a minor support, or do you want to wait until it hits this zone, which is a stronger zone, and the probability of it bouncing in that zone is very high, right? It's all about probabilities at the end. And well, the market can do whatever it wants, but at the end, we have to manage our risk and take trades according to technical analysis. And that's all we can do. That's all we can do. We don't know the future, so we have to do what we know. So if you drill down to the daily chart, you'll see it's going to look very different. Very different. It's not going to feel as smooth. You're going to see a lot of gaps, a lot of jumps. And right here, these dates are earnings dates. So you see that what happens after earnings, price either jumps or drops. And we're looking back just to about 2 years. Yeah, 2020. Yeah, so 2 years. So now you see in a more detailed view that price almost gets here and it rejects, comes back here. And you can fine tune your support and resistance based off of this. Now, remember that line we had drawn out. Now you see that price is kind of consolidating on that line. We can adjust it a little bit and say, hey, you know what? It's like right here, actually, where price leaves it, comes back here, consolidates, bounces twice, and takes off. So yeah, that could be an area where you may want to start a position. Although right below that, about $30 below, we have a stronger area where you can start a position and get in. So this is the daily chart. You'll see that in the daily chart, you'll see a lot of gaps. This is pre-market and after-market activity that happens, whether there's news, there's gaps in this. There's gaps over here. This was earnings right here. I remember this time. And when Tesla went on its tear all the way up to 488, but it was consolidating in this level right here, this zone right here for quite some time. It stayed from August 5th, kind of stayed in that zone, broke out a little bit, came back in till about October. And after October, it went on a tear and then it just had higher lows, higher lows, higher lows, all the way up to the top at 488. And that was a great move. You almost made $280 per share if you had taken that move over there. So that's how support and resistance work. We'll do one more example. We'll go back out to the monthly chart. Looks much cleaner on the monthly chart, right? Let's see. Let's do NVIDIA. I know we have a lot of NVIDIA fans here. So we'll start with the monthly chart. Monthly chart, the first thing we'll do is we'll look at the higher highs, higher lows. We'll see where price is consolidating up here, where price is rejected, obvious areas of rejection. We'll select our box tool. It can be here too, but I see here like these multiple months right here just closing below this. So we can draw out something like this. Now we don't have to cover all the way up to the wick. You already know that there's rejection there. We can go up to about this high, and we can say that, look, every time price entered this zone, starting around 136 and up, price is rejected. Rejected all the way from June of last year, right? June, July, here's August, September, October, November, rejected. December, rejected. You have January with a big red candle right here. And then now you have February trying to push back up, right? Now, where did it push back up from? Obviously, there's a support area somewhere here, right? So we're going to go ahead and mark out our support areas. Right? So we'll mark it out like that so we get as many touches as possible, right? So there we go. So now you got a support area right there. So, all right. So now you know that the price, every time it's hit in this zone between 110 and I would say 115, you can go a little bit higher. That price has bounced, right? Yeah, sometimes it wicks out, but what matters is the body, right? It's where the body of the candle closes. This just shows you that price is capable of going down there, but we had a lot of buyers in this area as well. So yeah, we can mark this area as well. So you see price bounced, bounced, bounced. Every time it hit this area, it bounced again in February. So we have to see, where is it going to go? Is February going to close in this area? It could be, I'm not sure. Or candle could close right here and then start dripping down again, right? But we do know that this area is a pretty strong support. The next area of support would be, it's more of a minor support because so far we've only tested it once and we've been rejected by it twice right here, and then we had a breakout. So we can draw out we don't know if this area is going to be supported again. We don't know if the price is going to come back here, but this would be the next logical place that price would come if this support becomes resistance and breaks and it comes down here, right? Obviously, after that, then we get into like the 40s and 50s. We have price here. We have no more touches of this, but we do know that price has respected this area once, twice, for 2 months, 3 months, 4 months, and then we had a breakout, right? Now, before that, where were we? We were bouncing off of this high, right? So if you draw out a little support here, all the way out to right here, right? Kind of shows that price was here, came back, broke through, retested, right? And then took off, right? So now when you look at NVIDIA, you see that, look, on the monthly chart, it's always been above the 200. We don't really consider that. We only consider in the daily chart most of the time. We know that price has just moved up steadily ever since this area right here, 2023, 2020, 2020, June, it broke out, retested, 2024, November 2023, November 2024, it broke out and had a great year, right? And now we're pulling back. And that's what I was saying, that Tesla has moved up almost 1,000%, right? If you just want to measure it from this point and go all the way up to here, you see that for 598 days, it's moved straight up, right? So it's a pretty good move. Now let's drill down to the weekly chart to see if you see the same thing, right? Yeah, pretty much the same thing right here. We'll see that Tesla is bouncing here too. So there's a little area right here that Tesla, this was the wick that you see on the monthly chart, but we see that there is an area here. So sometimes what we can do is we can take our line tool and just mark that area, or you can do a zone as well, whatever you feel comfortable with. But I usually mark the tool like this. I'll start from right here because I don't see anything else kind of meeting that area. So I'll just mark it like this. So I'll say that, okay, price does have the potential to kind of bounce in this area. You can also readjust your zone sometimes and say, hey, look, I'm just going to move my zone down just a little bit. You know, it's not going to be perfect every time. And then say, okay, here's a price, right? But for sure, it's bounced off this zone. So now NVIDIA is right here at the zone, at the support zone. And that is why it's bouncing right now, right? So we want to see NVIDIA kind of close this gap right here. There's a little gap, weekly gap between 137 and 128. And it looks like we're trying to close the gap. And one thing about trading you should know is that all gaps close. No matter what the gap is, eventually that gap will close. Whether it's on the downside or the upside, all gaps have to close. So that's just, I've always seen it happen. So there's a little gap right here. So if you draw out a little candle, a little box saying that, okay, this is a zone that it should close. I'll change the color real fast. All right. So we have a little, that looks like another candle. All right, we'll go orange. All right, so we have this little orange zone right here that most likely NVIDIA will fill and come back up here to 136. Not sure what's going to happen this week or next week, but it looks like NVIDIA is a little bit bullish right now. We're still kind of consolidating, bouncing off support. So that's what NVIDIA looks like. And this simplifies how to get into a trade and how to get out, right? So a lot of people did add over here in this area because a lot of people know where these zones are. They were hoping for a lower zone, but a lot of people did add. Sometimes if you're trying to get into a position and let's say you're at this point in time in January and you're like, well, I would love to add down here. If price comes down to here, right? Very close, like within $1 or two, if you have, let's say you want to buy 100 shares. Let me let somebody in. If you're trying to get into a position of NVIDIA and it's December, and then in January, you're trying to buy shares, and you see that price has come very close to this support area, and you have 100 shares to buy, you can get in like with a 10% position. That's what I usually do if I'm long-term or swings. I'll usually get in with like a 10% position, buy like 10 shares right here until that support area is reached. Once that support area is reached, I'll buy 50% of my position. So now I'm into about 60% of my position. And then once it confirms that we are actually bouncing, I'll add the rest on the way up. So it's called adding to your winning position. That way you have confirmation or confluence that my position is valid, my thesis is valid, that NVIDIA is bouncing and moving to the upside. So that way you don't just buy 100 shares here and then Tesla dips all the way back down from 124 to 113, and you're already down $13 a share. You want to come in segments. You want to buy a little bit here. Some people say, well, what if it just takes off? I'm like, at least it doesn't go down. Remember, we're trying to manage our risk. Yes, upside, you'll always make money, right? But if you say, well, I could have made more money, well, that's just greed, right? It's more important that you manage how much money you lose, not how much money you make. If you're in a trade, alhamdulillah, that's awesome. And it's going your way. That's great. You are going to make money. You can always add to your winners. But one thing you don't want to do is have a big loser and continue to add to that loser. Let's say NVIDIA didn't bounce here and then it continued down here. And you say, well, I see this support, I'm going to add here again. Unless you're planning to hold it for like 5 to 10 years, like a long-term position where you don't want to touch it and you're just going to add on every dip, I understand. But if you're going for a swing, you're trying to hold it for 6 months to try to push these all-time highs of 153 and break above it, then you want to be a little more careful with your capital. And we're going to get into risk management right now. Actually, it's been 30 minutes. So yeah, so I hope that's clear. I'll take a few questions if you guys have any questions on this on support and resistance, but pretty self-explanatory. It's just drawing out zones and then trusting those zones to work as it has in the past. Okay. All right. Excuse me. All right. All right. Risk management, right? You are a manager of risk. There's a quick disclaimer right here. It's not financial advice, just education. And we were going to do indicators, but we've now switched to risk management. I think indicators can be included with one of these, probably in the trading plan. So we'll just do 2 more, inshallah, 2 more Sundays, psychology. And then the trading plan is we're going to put all these things together, and then we're going to see how to enter a trade and, take profits and everything. So risk versus reward, right? That's the ultimate battle when you get into a trade. What is your risk? How much are you willing to lose versus how much do you want to make, right? You have to have a target, a profit target, right? The risk reward ratio measures the difference between a trade entry point to a stop loss. And a stop loss is where you want to get out. That's the maximum you'll lose. And a sell or take profit order. Comparing these two provides a ratio of profit to loss, and that's a risk versus reward ratio, right? Sometimes people say, well, I risk $100 so I can make $200. So that risk versus reward ratio would be 1 to 2. Some people say I only do 1 to 3, right? And I'll go over what are the winning percentages of lower risk versus reward ratios versus higher ones, right? Now there's multiple ways to manage your risk, especially for people who are long-term traders who are trading, who are not really trading, but they're investing and holding for a long time, right? And sometimes you have to manage that as well because you don't want to keep adding to a losing position. One thing is position sizing. You have to know how much you're willing to risk per trade, correct? Or per position, right? Position sizing is how many shares you're going to buy of a certain stock, right? How much of your capital will you allocate to one particular trade, right? So if you have a $100,000 account, or let's say you have a $50,000 account, most people say that the standard is you don't want to risk more than 1% per trade, right? So they're saying, okay, well, you're saying if I have a $50,000 account, $25,000 account, all I can risk is $250. Yeah, I mean, if you want to stay in the game on the long term, yeah, you want to risk that much. And then, because if you're right about your thesis, then it should bounce off that area and go up, right? If you're wrong, you don't want to be, you don't want to not get out of that position if you're wrong. You don't want to try to convince yourself that you're right. That's how you lose capital. And that's how most people blow up their account. They say only, what, 90% succeed, or 99% of traders don't succeed. They all fail. It's true, because this is it. It's managing your risk. If you want to stay in the game long term, you have to really manage your capital. And that's what you are. You're not a trader, you're a manager of risk. And there's some other caveats here. They say never lose more than 3% per trading day. I would just say per trade, per swing trade. You don't want to lose more than 3% of your capital. So, if you have a $100,000 account, obviously you don't want to lose $3,000, off of one trade, because that just puts you back, right? Let's go on to the next one. This is a formula. You don't have to know this right now, but the way you would calculate your position on every single trade, like for example, if you have a $10,000 account and you just want to risk 1%, then that's $100, right? And if you're trying to get into a trade around the $100 and say, you know what, I just want to risk 10 cents, which is not ideal at all. I don't like this example. Most likely you want to have a wider stop loss, because this will get hit right away, right? They say buy 1,000 shares, but most likely you'll buy 100 shares and you'll risk about $2 right here. But there's a risk formula, and we'll go over that once we actually get into the trading plan. The first way to manage your risk is position sizing, is to control how many contracts, or how many shares you take, right? The less shares you take, the less money you lose. Also, the inverse, you won't make as much money, but at least you won't lose that much money, right? So stop loss. What's a stop loss? Stop loss is a predefined level where you completely exit your trade, completely get out. You're like, look, after this, I will get out, and you stick to that. And the way you stick to that is psychology. We'll go over that in the psychology webinar. But it's a predefined price level where you exit the trade to prevent further losses, right? Using a stop loss orders are crucial to disciplined trading and avoids the emotional bias of holding on to a losing position. Some people don't like to be wrong. I understand nobody likes to be wrong, but this is the market. You are going to be wrong. You are going to lose money. You can decide how much money you're going to lose. That's the main thing. It's not if you're going to lose money. You are going to lose money. It's when you lose money, how much money do you want to lose? You want to lose $1,000? You want to reduce your account by 1%, 5%, 10%, just on a trade? You want to manage that as much as possible, right? And this, you can use technical levels in the charts to kind of figure out, well, if it loses the support, like we were talking about over here, right? You say in NVIDIA, right? Well, I entered a trade here. Let's say I entered a trade here at 112.70, right? Right in this area. Now, if NVIDIA turns around next week and starts going down here, it's like, I'll say my stop loss is right here, right? Let me get my tools real fast. Oh, there are my tools right there. So say that if my stop loss would be right here in this area. So if NVIDIA goes below this, I'm out. I'll have like a little bit of space below it. So if NVIDIA trades below and a candle closes here, right? Like this, if it closes below this, I'm out. I'm out of this trade right here. And the reason being is because once we lose the support area, this support becomes resistance, right? And so the trade may carry out like this, right? And it may go all the way down here, and then may bounce from here and then go back up, right? But you don't want to lose this. You don't want to lose this $10 to $15 here per share and be like, I'll just add down here. Because you have to understand that if you're doing a swing trade versus a long-term position, you don't want to go back and forth between those, right? So that's how you usually draw out your stop loss. I'm going to go into more detail about how to get into stop losses, how to manage your stop loss. So yeah. So you set it at technical levels, you set it at support and resistances, right? You say profits, I'm going to take it at this resistance support, that's where I get in, and below the support is my stop loss, and that's where I'm going to get out. That's the main thing, right? So We just went over risk versus reward. These want to have a minimum of 1 versus 2. That means if you're risking $50, you want to at least make $100 off it. That means you set your levels, your shares, and your targets based off of that. 1-to-1 is very difficult, right? 1-to-1, you're risking $50 to make $50. Most people don't do that. You're in this to make money, right? You're not in this to break even. You're in this to make money. So you should have a little bit higher standards about your trades. So that's another way to manage your risk. Fourth way to manage your risk is to diversify, right? And I'm not speaking to swing traders or day traders. I'm speaking to someone who position trades long term. They have $100,000, $200,000, regardless of the amount of money you have. You want to try to diversify. And the way you can spread your risk is you can spread it across various assets or sectors. Like, I don't know if Costco is, halal but I do know that it just hit $1,000, right? And that's not in the tech, right? It's not a FANG stock or anything like that. But you manage your risk by spreading across various sectors, or you can also do crypto, commodities, gold and silver. Like, I'm in all three. I'm in all of these right now. I have stocks, I have crypto, I have gold and silver. Gold and silver is the least for me. I'm about 25% exposure to gold and silver. And I started this when COVID happened. So I started buying a lot of gold and silver. And now I think gold is at 2880, I believe. I think I got in around 1100, 1500, right around that time I started buying physical gold. I mean, that's just me. You guys can buy ETFs and other, but I actually bought physical coins, physical bars, gold and silver. It's a good way to also hedge your position. So I'm about 20% here. I'm in 30% of crypto, Bitcoin, XRP, and the rest is stocks. So I have about 2 or 3 accounts in stocks as well. So that's the way I hedge it. So I'm not 100% in stocks, 100% in crypto, 100% here. I kind of split it up. So if stocks just start dropping big time, I'm hoping that crypto goes up. Or gold and silver is usually inverse to the stock market. When the stock S&P 500 drops, gold and silver has a rise. So you kind of hedge your position. If you have a $100,000 account, you don't want the whole $100,000 to just go to like 30 or 40, right? You want to hedge it a little bit. So it's good to diversify your larger portfolios, including your 401ks, IRAs, and stuff like that. You can do the same thing and go across different market sectors, right? So now let's talk about stop loss, right? Stop loss is one of the most important things for traders to do, right? It's just an order that's placed with your broker to buy or sell once the stock reaches a certain price, right? Let's say you bought right here. There's a very archaic example, but basically showing that you buy right here, the stock moves up, it doesn't hit your target of up here. And so let's say you had a target up here. You get in right here, and then your stop loss is down here, right? You get in, it never hits that target. You don't take any partial profits right here. Eventually it comes and hits your stop loss right here. That means you have to get out, right? You can even, you want to have your stop loss down here, that's fine too, but you have to get out because if you don't, you have this huge loss that comes down here, and you don't want to do that. I mean, enough of these losses, and it'll take your account out. You won't be able to trade any longer, right? It's harder to trade. Here, let me show you strategy, right? So let me explain how this chart works right here. It's not as important, but I do want to show you what the profitability versus non-profitability is. That 1-to-1, this is your risk versus reward. That means you're risking, let's say, $100 to make $100. And if you're only profitable 20% of the time, you won't be profitable overall. You need to be at least 60% profitable at this 1-on-1 versus risk. That means out of 10 trades, 6 of them have to be winners, right? At this level. Now, once you get to like 2-to-1, 3-to-1, that's more ideal, right? I'm right here in this area, 3-to-1. That's where I do, right? And usually my trading is around 40%. So that's what I aim for. I didn't just get here overnight. It took me years, almost 5 years to get to this point, right? But I'm around 40% win rate, and I usually risk whatever to make 3 times that, right? Usually, let's say $100 to make $300. That's usually what I'm doing, right? Per trade, right? So if you're risking 1 to 3, 40% of the time, and your profit and your win rate is about 40%, then you'll be profitable most of the year, right? You'll be profitable most of the year. So it does never happens. These are home run trades. These don't happen very often. These rarely happens, but usually it's around here. It's usually 2-to-1 or 3-to-1, right? So It's a good way to kind of think about, and the way you measure what you say, how do you measure a win percentage? I log my trades, every single swing trade that I do, I log it. And then over time, the journal will show me like where I'm taking my best trades with setup. So I spend a lot of time journaling. At the end of every week, I spend a lot of time, hours to journal to see my win rate, win-loss rate, my ratios, which setups are the best for me, which trading times are good, which stocks are good for me, and then I just stick to that. Because without getting information on how well you're doing, without tracking yourself, you don't know where your weaknesses are or where your strengths are. So it's very important to track yourself. Here's just another example of how a stop loss order works. You buy here, this is your risk, and if it goes below that, you have to get out. And these orders, these stop loss, they can be mental stop losses where you say, oh, if it hits, I want an alert to let me know that it hit that, and then I'll go and click the button to sell, right? But you can also, in multiple brokerages, you can also set a hard stop, right? You can actually put in a stop order and say, hey, look, if Tesla hits this level right here, 300, I want to sell all my shares right here, and I just want to take this loss right here. That's it. I don't want it to go way down here. So those are called hard stops. Hard stops are actually stop losses, stop orders that you actually put in and press submit. So the order is floating around in your brokerage. So as soon as it hits it, it'll trigger, and most likely it'll send you a notification on your phone saying that, hey, you just sold 25 shares or 50 shares of this, and this is how much you lost. So those are sometimes very important. As a beginner trader, I would definitely recommend to have hard stops. You know, I mean, hard stops are important. I don't do hard stops anymore because sometimes you have candles that wick down and go back up. Those are called stop hunters. It's usually market maker tactics. That's more of an advanced course, but so I wait until the candle closes and then I initiate an order in live. So I usually work off of alerts. Another similar example. So yeah, here's a live chart example. Well, not live, but it shows that there was a nice move up and then it bounced right here twice. So it had a higher low right here. So this person decided to enter their trade right here, and they said, okay, you know what? This low is pretty good. There's a nice little support area going this way. So I'm gonna make this support my stop loss. So if it goes below this, maybe I'll put it a little bit below. You don't want to put exactly where the candles close. You want to put it a little bit below. If it does that, I'll definitely get out. But my trade entry is right here. And it does come back down. It comes very close, but it doesn't hit that stop. If you were still in this trade and you said, look, I want to get in right here, but my target is up here, right? My target is here. I'm getting it at $27. My target's at $32, right? So you wait for the trade to happen. You don't get out. Even if it comes here, you don't get out because it never hit your stop loss. Eventually, your trade will succeed. So right here, we finally hit that. And then you take your profits right here. Well, how much profits do I take? I usually take about 80 to 90% off. I want to lock in my profits as much as possible because this was my target. But sometimes greed sets in and be like, well, what if it goes higher? It may, but this was your thesis. This was your trading plan. And that's where you take most of your profits. And yeah, you can hold a few runners. You can hold like 10 or 15 shares, depending on what size you have, and then let those run. But don't be worried about this. Just know that you did really good, right? This was your reward. This is your risk, right? Very small risk versus a very large reward, right? That's it. I mean, that looks like a 3-to-1, 4-to-1 trade right there, right? So let's go with some live examples, and I'm going to switch over to Thinkorswim, and we'll go through that. Okay. Now for this example, we'll go into the daily chart. Remove some of these. We'll zoom in a little bit. Now, if we're in NVIDIA, right? NVIDIA, we're on the daily chart. We already did the thesis on the higher time frames. We know that there is a resistance in this zone. I also know that there is some resistance up here in case the stock does reach over there. Then I know there's resistance up here at all-time highs, right? So I mark a few levels with lines and tools. And then I know that price has been kind of bouncing in this area right here. So you can even draw out a little zone in a different color right here. So you can say, all right, this is a zone right here, right? Put it like right there, right? All right. So we have a zone right there that it has proven that it's held several times with 1 point, 2 point, 3 point. right here. We'll all call this a 4-point, 5-point. So it's bounced, right? Now that we've gone below this, right? Now it's holding this as resistance, right? We had a drop right here. Candle moved up, went back down, got rejected again at this point, went back down. Now we're back in that same area. So for me to get into this trade, I'm going to say, well, if price is holding this area, if the price action goes above this, right? Let's draw it right here and say that if a candle closes, let's say above like this, right? Then my trade will be at the break of this, right? As soon as it breaks above the support area, I'm going to get in right here, right? And my stop loss, I'll use a different color. This is a swing trade. Will not be exactly at this line, will be a little bit lower, maybe like right here, right? So my stop loss, well, that's an ugly one right there, right? Okay, let's just draw out a line. My stop loss will be somewhere right here, right? So my entry is right here. My stop loss is right here. Now, if you look at the price of that, is I'm entering around 130. Let's just say 130 for the sake of math, right? And I'm exiting 126, right? Or let's say 127. So I'm risking $3 per share, right? Now, where's my exit? Where do I want to exit, right? That's where you want to know how do you manage your risk versus reward. So if this right here is $3 a share, you say, well, I'd like to get to the top of this zone. Obviously, you have a lot of candles closing in this area, right? Like, look at all these touches right here, right? 1, 2, 3, right? Holding it. This is holding it. So ideally, you want to get in up here, right? Let me erase this real fast. So if your entry is right here, your stop loss is right here. We'll draw it all the way here to here. And then your entry is going to be, sorry, let's switch color. Entry is going to be right here, right? That's your risk right there. And then your reward is going to be in this area right here, right? So your risk, I mean, anywhere in this area, I wouldn't say exactly up here. I would even say somewhere around here. You have to set targets for yourself, right? So if price actions does start moving up, right? If you have a nice move up, if you have a nice move up and it goes like this, and it comes back and retests, usually we always have a retest, and it comes and hits this area, you already made about 136, 129, 136. I wouldn't mind taking some off right here. Like, you sell a few shares right here, it consolidates, and then it moves back up in this area, right? Because we have several areas kind of like you have these areas where price kind of stalls a little bit, like right here, minor resistance areas. Take some profits off right here. Take 50% off your position right here because it may go this way. And then as soon as it gets close, anywhere in this zone, right? Anywhere in this zone, you want to start taking all your profits, right? Because you don't want to wait to the peak. I want to get to 149, 144.99. It doesn't work like that. You got to start taking your profits right here in this zone, right? I would sell about 80 to 90% of my position and hold a runner in case it started going like this and came back down, right? At least take 90% of your position. And then now your stop loss, you don't want your stop loss down here anymore because you don't want to lose any more money on the leftover contracts that you have. This is called a runner, right? Sometimes people will just get out of their runner right here and have no shares left. But some people, usually professional traders, they leave, let's say out of 100 shares, they leave 10 shares. They'll take 90% of their position off over here and they'll leave 10 shares. And then what they'll also do is they'll take their stop loss, they'll take this stop loss, erase this, and they'll move it up to their break-even point. That means their entry point. That means now your stop loss is also your entry, right? So they actually put in a hard stop. They say, look, I've already taken my profits up here. I've already taken 90% off over here. This is just 10%. If it bounces off in this area and suddenly goes all the way up to 160, at least I'll make some money off those 10 shares. But in case it comes all the way down to my entry price, I'd like to get out of those shares at my entry points. This is called a break even, right? This is break even, where you take your stop loss from down here and you move it up to your break even, to where you actually entered, because you've already taken your profits. You don't do this when you're in the middle of the trade before you take profits. Like you don't move your stop loss. You never move your stop loss off when you're in the trade and you haven't taken any profits. You only want to do that once you've taken profits, like here, 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 you've taken profits, 3 different price targets. You've taken profits. Now you're out of 90% of your position or 95% of your position. You have 5 to 10 shares left. That's just for example. So if price does come all the way back down here, this stop loss triggers automatically. It'll sell it, right? So automatically, all your shares will get sold right here. That way, you don't have to suffer this loss because you don't need to lose any money now because you've had a good trade. Your trade's already moved up. So that's an example of how you take a trade with a stop loss. All right. So that's Nvidia. Let's look at a few more. There's Apple. Now let's go to Tesla. Now with Tesla, you have it reaching you have it breaking resistance. So right now, I don't know if I'll go long on Tesla, but let's just create a thesis. Let's just say that if Tesla does come back down to this level, right? Because it looks like there's some price action right here that's it's holding, right? Right. So we can even draw out a small zone right here. Right? And say, hey, let's say if price does get back in here, I'd like to get in, right? I'd like to get in right here. Let's just say that. I'm not saying that I'm going to get in, but if price does reach this point, 357, 357.83, is that what it says? Okay, so yeah, let's just say 357-ish. If it gets there, I'm going to take a position around here in this zone right here, right? So if you take a position, say, where's your stop loss? Before you even get into a trade, you have to say, where do I get out? That's the question you have to ask yourself. Like, how much am I willing to risk, right? So if you, and then you look back at the technicals, you can't just arbitrarily place it anywhere in this. Yeah. I mean, the next major, obviously major support is down here, but you want at least this support right here because you have multiple candles holding it, right? Holding this area right here, right? You have candles right here, candles that bounce right here, another bounce right here. So this looks like a good area to hold support. So if this would be my stop loss right here, right? Whatever that 328. And my entry point, let's say if price reaches here, right, and gets to all the way down to that level, then my entry is going to be right here, right? My entry is going to be right here. Or you can say, well, I want price to bounce and get above this zone, and my entry is going to be right here. So somewhere in this area, you have an entry, and that is, let's see how much we're going to be risking. You're getting in around 340, let's say 350. You got in at 350. If it's 330, that's quite a big zone. That's you're risking $20 a share. Okay, let's just say you do want to risk $20 a share, which is a lot, right? But what is your reward going to be? It has to be at least $40 a share, right? So if we're at 350, we want to go at least 390 to 400, right? Remember, I said 1 to 2, right? So if you look at the 400 mark, we see that there is some confluence because it's also a psychological level, right? 400 is a psychological level. Any of these whole numbers, 400, 450, they're psychological levels. So we can draw out a support right there, a little line right here. And you can see that when I draw this line out, there's multiple touches in this area, right? Like, for example, you have this, you have this, you have these 3 rejections right here. You have another one. You have price that just kind of stays either under or above this line, but it hits it, right? So that can be your reward. So you can say, okay, this is where I'd like to take profits, and this is my risk, right? So if the trade plays out and it goes like this, rejects right here, comes back right here, and then it gets close to this zone, you want to see other support areas as well. Like, well, I see something right here. I want to start taking my profits in this area, right around here. 390, 395, I want to start taking my profits. You know, I never want to wait until it hits 400. So, you know, if you have 100 shares, you take maybe 20 shares off over here, maybe take another 30 off here, you're off 50% of your position. And once it actually hits your target at 400, then you take off about 80 to 90% of your position. Yeah, because it does have the ability to go up to 420 because you see that this resistance area, especially with these candles bouncing off over here. Let me show you right here. So in this area, you have a lot of candles that are rejecting and things. So most likely it'll probably go up to like 420, right? But it's what you risk that matters, right? It's how much are you willing to lose on that. So you can just do the math that if my stop is $20 per share, do you really want to take 100 shares, right? You do the math and 20 times 100, you know exactly what that is. Do you really want to do that? Do you really want to lose $2,000 here to, let's say, $40 gain, right? So to make 4,000. That's up to you. I don't know what your thing is, but I mean, yeah, if that's what you need to do, that's what you need to do. But you have to understand your risk. So if you say, well, I don't want to risk that much money, that's too much. Well, then you need to reduce your position size, right? You need to reduce how much of your how many shares you're taking, right? So this would be your stop. So now if this trade doesn't go, and get in right here, hits this, and now it's dropping, don't just get out right here, all right? Because you've already created a plan. You said, look, I'm only going to get out in this area. I'm not going to get out anywhere else. Don't get out right here. Because what it could do is this, and I've seen it do it many times. It comes right here, does this, takes off many times. I'll get out, and when I was a more novice trader, I'm like, oh my God, I don't want to lose another $4. I'm just going to get out right here. As soon as it gets out, it almost feels like the market is waiting for me to get out of the position. It's like, oh, surprise out. Let's go, guys. Full. Everybody buy, 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 buy. Go, go, go. All-time high. And it's like, what happened? Um, I'll tell you what happened. It's because a lot of people think like me. Novice traders, they all think alike. They don't want to lose money. And as it drops down to the stop loss, everybody starts getting out. And the market makers know this. The market makers are the ones who set the prices for these things, right? They know this. So they'll send the price lower. It's called a stop hunting candle. They'll send a candle, and I'll show you. They'll create a candle that drops all the way back down to this level, and then it wicks right back up. And you're like, oh my God. So they'll send the price down here just to stop people out because they know a lot of traders are putting their stop loss right here. Because where do people put stop losses? At supports. Where do people take profits? At resistances, right? That's just psychology. That's just how everybody, all traders act, right? That's why you see professional traders will not put it exactly here. They'll go about maybe 50 cents lower, or maybe at $2 lower. They'll go right here because that next candle will come all the way down to here and stop right here. And then it'll close back up here like this. It'll be like one of those doji candles, right? It'll wick, take out everybody. And since everybody is selling, a lot of people will just get in and the price will just go right back up, right back up. And then it'll take off. It'll take out all the liquidity down there and it'll take off. So it's very important to wait till your stop loss gets hit, right? And get out because that's just the money that you risk to lose. Just consider that money gone already. Don't attach yourself to that because a lot of people will come here and it'll hit their stop loss. It won't hit their stop loss and they'll get out. And now the markets be like, okay, now push the price up. And then you'll see these rapid movements and then price will go all the way up to the actual level that you wanted. And it's very frustrating. It's very frustrating and it can cause big drawdowns in your account because you keep getting out, you keep getting out. So you got to keep that in mind that once you create that trading plan that you say, I'm going to get out right here and I'm going to get in right here and I'm only going to take profits in this area, you got to stick to it. Otherwise, why'd you get into the trade from the first place if you're going to keep doubting yourself, right? Right. Let me see if I had some more examples here. So this is a good visual of what I was talking about your targets, about your entry and your stop. This is actually a perfect example. I don't have to draw it out. Is you have your resistance right here, right? You have your resistance, hence, and you have your support, right? You have an area that it hit right here. You have all these areas that are creating a zone, right? So now you have a zone, a support zone as well. So obviously, if price is coming down here, you're thinking let's say we're at this point in time, you're thinking, okay, if we come down anywhere down below this, I'm going to get in, right? So and then I'm going to place my stop right below this wick. You see this wick right here? A lot of people, if they got in right here and put their stop right here, the wick will wick them out, the candle wick, right? So this person created an entry right here. They say, I'm going to wait for confirmation. Not only I'm going to wait for a bounce, I'm going to wait for a confirmation. So they got in right around here, right? And they put their stop way down here. Not exactly where it is, a little bit below. That way, if you have a candle like this, it doesn't just take you out or shake you out completely. And that's the entry. And where's their target? At the resistance right here. That's their target right here, right? So you have a nice move up, you consolidate, and this zone sometimes scares traders. Oh my God, it's moving sideways, it's going to drop. Has it dropped yet? It has not. So you stay in the trade. Stay in the trade until it hits your target. Once you hit your target, you take 80 to 90% of your position off and keep 10%, right? In case it goes like this and takes off. Then your 10% will continue to run. Let it run. let it run. And now you can move your stop loss up to your break even, right? So now, even if this pulls back all the way, it'll get you out right here, not way down here, right? Because once you take profit, you always got to move your stop loss up and say, hey, look, whatever shares I have left, I'm going to get out at my entry point, right? It's called a break-even trade. So that's a really good example of a really good visual of how you create your stop loss and where to take profits, right? Here's another example right here where you see obvious areas of support drawn by these circles and resistance, support, resistance, right? So next time this price hits this area, you create, you have a stop loss, you have a buy order right here, and then it moves all the way up. You sell your stop loss right there, and then you can even move your stop loss up, right? Another trade right here. So I'll go to one more live example, and then because repetition makes this thing perfect, right? Um, let's go to AMD. Golly, AMD is a mess. All right. We'll go long. It doesn't, it doesn't, once you get into the habit of creating support and resistances, it shouldn't take you very long to do it, right? It's pretty fast. I know it takes, initially it'll take you some time to do it, but you know, after a while, you'll get good at it, right? I'm adjusting this so I can get multiple touches right here in this zone, right? We have multiple touches. So that creates a stronger zone, right? Here also we have multiple touches closing. We only have two right here, but we also have a little zone right here. So I just want to make sure I cover all these zones and potential areas where price can actually come and fluctuate right here also. We have a little area right here. And this, if you don't like lines, you can always draw out a small zone, for example. Um, these are more minor supports. As you can see, AMD just flew through this, right? But you do have price rejecting in this area, hence why I like to draw it out. Okay, so that's a monthly chart. Let's drill down to the weekly chart. That didn't take me long, maybe a minute or two, right? Um, so now obviously we're going to draw out a few more things out here. I see another zone right around this area, minor zone right here, coming in here. I see prices bounced off right here. This zone is also coming into handy right here. So instead of drawing a line right here, now that I see multiple touches in this line that I drew out, I like to draw a zone. If I see a lot of touches, then it's better just to draw out a zone. I'm going to draw the zone. You see how important support and resistances are? It's the fabric of your trading. It's where you can make money and prevent larger losses, right? All right. So now we have these support and resistance zones drawn. So now let's go into our daily chart. Now you see daily chart is below the 200-day moving average, right? And sometimes you see the 200-day moving average actually acts as a support and resistance. You see how it came here, bounced, and then went below it. Came back, rejected at the 200-day. Came back again, rejected, right? It's almost acts as a kind of like a more fluid support and resistance, support and resistance, right? There's a resistance right here. There's a support right here, right? Support right here, right? And it breaks through. So this is a consolidation area in this area, right? And before it broke down. So that's what AMD did. But now AMD is getting to a very crucial area right here because there is a support down here at the 100 level, right? 100 is a very key psychological number as well. So a lot of people will look to get into that area, right? But you see that price has bounced a few times right here, right? Let me just draw this out, right? So you see that price right here has bounced. Right here is bounced. One, two, rejected right here, right? Rejected right here, right? So you know that this zone that we drew out is very, very strong. It's a very strong zone, especially for the daily chart, right? That you have multiple bounces, like you have a bounce right here and it went right to a target. So even if you took a trade right here, it would have gone there. If you took a trade right here, you would have made profits right there, right? You see these support and resistances, right? Very easy. Get in, get out. Simple, right? Your stop loss is right here. You enter right here, maybe for a confirmation, and you get out right there. It's an easy trade, right? And then here's another example that if you did get in right here and it didn't go all the way up to your exit right here, and it failed, you would get out right here. This would be your exit right here because you don't want to be part of this, right? So now, if we look off of this, now we know that we have multiple touches in this area. We can use that as a profit target, right? Again, there's not financial advice, but just letting you know that if you did need to get in, that this would be a great area to get in. So I'm going to zoom in just a little bit right here. So if you need to get into a trade, we want to wait for AMD to hit this area, right? So you could wait for the $100 level to hit. As soon as it hits here, let's say the candles come like this. Sometimes it goes below and it goes like this. Sometimes you would just want to wait for a slight higher low like that. And then if the candle's going like that, the best place to enter would be right here at this break. Right here at this break. Because right here, there's a break of structure, right? It's going like this. You have a higher low, you have a low, you have a higher low, and then you would get in right here, right? This would be your entry, right? And then your stop loss would be, let's zoom out real fast. Let's just say 95. Let's say $94, right? $94. Let me change the color. Sorry, I'm running a little bit 10 minutes behind. Just bear with me. This will be my last example. Let's say $94 is your stop, right? This is a good trade. And the only reason why I say is because you're hitting a major support level, right? And you have a resistance up here, right? So you're risking, what are we risking? If this is our, sorry. If this is our profit target, 125, right? What are we risking? We're getting in around 101.50, right? Or let's say 101. We're taking our contracts, our shares are on 101, right? And we're risking 94. That's $6. So you at least want to make $12. At least want to make $12, right? 2 to 1. At $12, because it's 2 to 1, you want to take a little bit of profit. Let's see where $12 is at, right? $12 is right here. Oh, look at that. It's a level. $12 is a level. I mean, you can tell it's a level because I'll show you right here. I'll just draw a little line right here. Look. You see how price is bouncing right here? That's 2 to 1. This is your risk of $6, right? And then $7, and then that's double what you risked. So if price does get into this area right here, right? Price goes like this and then gets over here, I would take partials, 30%, 40% of your position, because this is your profit target up here, right? Because it's a technical level, because you see this area is an important level. Price is bounced and rejected here, right? So take a few, because look, just in case you take 20% off here and if the trade goes south, then at least you made some money. And every time you take profits, you bring this stop loss up to break even. You always bring this stop loss up to break even because you don't want to lose it. This is a winning trade for you, even if it's 30%. It's still a 2 to 1 trade, right? This is still a 2 to 1. You risked $100, you made $200. That's a 2 to 1 trade. You've already won. You've already done well. And anything after this is a freebie. It's a freebie. That's why I love these free trades. As soon as it hits my first 2 to 1, I always take some profits off, 30%, 20%. It's up to you, right? But once I do that, I'm no longer risking this area. This area is gone, right? My stop loss now is moved up to break even. And let's say you take 30% off over here, and now price consolidates, comes back up here, moves up to this level. Now, if you take 30% off over here, you want to take another 60% off over here. So now you have 90% gone. And now you've done a great job with this trade. 125 from 100 to 125, that's almost $25 a share. And you've only risked about $6 per share, right? That's a 4 to 1 almost, right? So you have a 4 to 1 trade here based off of support and resistances, right? Purely based off of support and resistances. But that'd be a good example of how to get in and get out of a trade. Always move your stop to break even once you start taking profits in this area. And then leave a runner. Leave like 10 shares, 5 shares, whatever your risk appetite is, because in case it comes like this, pushes up here, goes like this, and goes all the way to the 200-day moving average, because it loves touching the 200-day moving average, right? You see these touches all the time. And if it comes up here, then that's awesome, right? That's 145. And sometimes you're 5 to 10 shares left and you made another $20, $30 per share. It's not bad. And that's usually how I structure my trades and my trading plan. But my main thing is, when do I get out? When do I get out? When will price hit? So I'm always focused on here. I have a lot of alerts in this area. I'll hit alert if it goes halfway through. In Thinkorswim, you can literally just right click right here and you can say, I'd like to create an alert. Where is alert? Yeah, create an alert. And say, if it hits this price at or below this price, I'll create an alert right here. And you see it shows the alert right here at 97.39. Then I hit another alert right here that, hey, look, if it goes below that at 94, please alert me and let me know. That way I can go in to my application and get out. All right. So I hope you guys understand that. It's 8:15. I'll just take questions. I apologize for going over. If you guys have any questions, we only have a few people. Just unmute yourself and ask. You can type if you don't want to talk. Must have done a great job explaining. There's no questions at all.
Assalamualaikum, brother Sarfraz bhai.
Walaikum salam, Brother Nawaz. How are you?
How do you like the resistance and the support zones? You draw it on a daily basis or a weekly basis or a monthly basis?
Well, once you draw out a few zones, for example, like an apple, once you draw out, they stick. I just leave them there, right? I usually just leave them there because I'm like, if I go back to Nvidia or Tesla, these zones are always going to be there, right? But sometimes if the only way I will add more zones, like this is the hierarchy, right? This is the larger zones, the larger picture because you're looking at the weekly chart. These zones will always stay there. They don't change unless I have price discovery and then price starts moving up in this area, then yes, I have to draw out more zones, right? Because we have new price discovery, right? Price that has never reached. But sometimes what I'll do is if I have to go on an intraday, like if I'm really trying to snipe my trade, like trying to get an exact entry, I'll go into like the 4 hour chart or the 1 hour chart, right? Yeah, I know. Once you get into these charts here, it gets a little bit more messy. It gets a little more detailed because now you see support areas where sometimes you don't see them, right? And sometimes I go to the 1 hour chart to really figure out like, hey, where is this price action going, right? So if you're up here and the price is trying to move up here, you won't see these in your zone. So sometimes it's good to kind of mark out these zones. But yeah, no, most of the zones stay unless they're irrelevant, right? Like these zones are not going to go anywhere. They're always going to be there, right? If price comes back up here and breaks, I know that it's going to come back and retest this high right here of 415. Check it and then move back up. And I know that this is all-time high at 488, and if it breaks that, then I know that this becomes support now, what used to be resistance. And now we're looking for another resistance up here, wherever it rejects and moves back down. But you only need to do this once, right? And you need to adjust it sometimes if price is moving down here and creating a consolidation area, which creates a zone. But most of the time, I mean, you can tell this is 2021, right? This is 2021, all the way over here. We're all the way in 2025, yet price still continues to respect these zones, because price has been here. It's going to go there again. That's just the way it is. So I hope that answers your question.
Yeah, people look like 1 minute, 5 minute, 15 minute.
Yeah, yeah, we definitely do that if you're, day trading or if you're really getting deep into it. Like, for example, like now I trade off the 15-minute chart all the time.
So how does it work?
So one of my favorite strategies that I trade a lot is the 5-minute test and retest and push, right? So, and this is more of a shorter trade and everything like that. So how these work is like this is the 5-minute chart, right? The darker areas is pre-market. This white area is the actual thing. Obviously, Tesla is dropping like crazy. So let's go into something that's actually recovered. Let's go to Nvidia, right? So let's go to this day right here. So the 5-minute chart is every candle is just 5 minutes and it moves pretty fast, right? So if this is your candle right here, right, you can even draw out support and resistances here, right? But the thing is, you're not going to know what this day is like. You're not going to know. You're going to be right here at 6:30 a.m., right? Right here at 6:30 a.m. This is you. So what do you know? You know you know what happened before, right? So you got to go back, right? And you got to say, okay, look, what happened before? What happened the day before? If I'm trading here, what happened the day before? Well, I see that that's why I don't go to 5-minute right away. I'll go to the 1 hour, right? And I'll try to figure out what's going on intraday. So if I'm trying to take a trade in this area, what happened before that? And you see these areas where price and nothing changes. It's just the time frame changes. You see that that multiple areas are holding this, right? So I'll draw out a zone right here and go all the way across. Now you see that, now we don't know that these days happened. We just know that price has bounced. Now this is a new zone that I'm drawing because I'm at a lower time frame, 1 hour, 15 minute, 30 minute. You know, price is bouncing here. So you know that if you're on this day, you know that price has to get above this zone in order to go back up to this level, right? So if you're on this day trying to trade on this Tuesday, you want to make sure that price gets above this level, right? This is a very important level, right? And you have some smaller levels right here that, hey, look, that price is touched right here, right? So you want to draw those out. But the rest of it, that if you were taking a trade on this day, I would shoot for this target up here, 128. We're down at 119. And in fact, I think I did take a trade on NVIDIA last week. So let's zoom in now that we've understand that, okay, we have some support right here. We're waiting for that to break. We go to the 5-minute chart. Okay, so this is what happens here, right? Price does break, right? We're waiting for that candle to break. Price does break. And now we're trading this day, right? So we're watching what happened here. Well, yesterday price did break, but it went back to that level. But it created something over here, created a high. So I'm going to mark yesterday's high. Yesterday's high, yesterday's low are very important, right? I'm going to mark yesterday's low right here. Once I mark yesterday's low, I know that there's a little range. Now, when the stock market opened, let me see. Okay, yeah, right here. Okay, so we're going in this area. Now, when it opened here at 6:30, you'll see this yesterday's high. This is yesterday's high, the little line that's right here. Yesterday's high is being respected. So every time price came back and hit yesterday's high, there's some buying action happened, right? So you would say, okay, well, this is my 5-minute, right? Anything that breaks above the 5-minute, I'm going to take, all right? This is my 5-minute. It's called a ORB, opening range breakout, the 5-minute opening range breakout. A lot of day traders use this. So I'm going to mark this right here. Sorry, 1 second. What happened to it? All right. All right. So I'm going to mark this area right here. So I'll say that, hey, look, if price breaks above this, I'm taking a long position, right? So price does come here, but no candle closes above this, right? No candle closes above this. Candle closes, but you have a rejection right here. Price breaks right here, right? You see a price break. You see this level holding, right? Price eventually breaks. What does price need to do every time it breaks? Every time it breaks, price needs to retest. Retests. That is your entry right there, right? That is your entry. This will be our entry right here, right? And where would your stop loss be? Let's figure that out right now. The stop loss would be at the last area that there's support, right? Right down here, right? Yeah, it's a pretty wide stop loss. Some people will say, hey, look, you can make a stop loss right here too, right? Right? That if it goes below this, it's going to go all the way down to here. So you have multiple candles holding this area, a lot of 5-minute charts. So you can put a stop loss right here. This is your entry. And you say, where's my reward? My reward is going to be this high up here, right? Right? Or if I'm going to hold it for a swing trade, I want to go all the way up here, right? So eventually it does hit, right? It does hit right here. It does hit. But we have to have composure to hold it till that point, right? Because it comes very close. Let's say you take a few partials right here, but eventually towards the end of the day, it does hit that target, right? It came here, it came back to your entry right here and almost stopped you out, right? There's your stop loss down here. It almost stops you out. So if you didn't take any partials here, if you didn't take any profits here and it pulls back, you're holding until it hits here, or if it hits your stop loss. It's the only time you get out, right? So if you look at this trade, as far as risk versus reward ratio, you are getting in at 122, let's say 122, and your risk is, well, actually, let's say you got a 123, your risk is 122. You're risking $1 to make $3, right? 1 to 3. That's 3 to 1. So that's not bad at all. Okay. And at the $2 mark, you would take some profits right here. So if it came back here and then you're at break even, then you would get out here and you would miss this run up here. So on the lower time frames, yeah, it's the same thing. It doesn't even matter. It doesn't matter what these candles represent. The support and zones pretty much stay the same. So I hope that answers your question. Jareed, Albert, you guys are good?
Yes. Yeah.
Okay,
Thank
great. No worries. Time frame on the daily chart. is Albert is just, I mean, each candle will be 1 day. Each candle will be 1 day. For example, like if you're looking at the daily chart, like this, each candle is 1 day, right? This time frame, you can adjust how much you want to view. I mean, this goes all the way back to 2020, I think. Yeah. So you can go back 5 years, 10 years, but yeah, the focus is right here. The only reason why you need to go back in time is to figure out where price action was, right? What was price action doing, so we can draw out our support and zones, support and resistance zones. So yeah.
Appreciate it. Thank you.
All right, no worries, guys. Well, guys, thank you so much for attending. I'm going to call it a day, inshallah. We'll see you back next week. Next week's going to be psychology webinar. So we're going to discuss greed and revenge trading. That happens quite a bit. But I will be recording this and posting it. Thank you so much for attending. Have a good day, inshallah, guys. Assalamu alaikum.
Have a good day.
Take care.